a phrase that's been going around in my peer group is VTI and chill or VOO and chill as an investing strategy for your equities. What's your thoughts on that?
Yeah, that's been out there for quite a while. We didn't have the chill word, but there's a group called Boggleheads that always advocated, basically there's really only three or four investments you need at Vanguard VTI, which is total stock market index, BND, which is total bond market index, both for the US, VX US, which is the total international stock market index, and then as of 2013, BNDX, which is the total international bond index. So you take those four, and you could, make a portfolio of, very, adequately balanced, and essentially you don't have to do anything. Certainly don't have to pay an advisor, and you don't, Vanguard's internal costs are very, very low, and I actually advocate that. I think that's a great idea, up to a certain dollar amount. Because personally, when I get over a $500,000, I don't want to have everything in Vanguard. I like Vanguard. I think they're great, but I don't want to have anything, all of my stuff in any one company. Period. And just because like for example, with exchange traded funds, they're exchanged on the secondary market, and never know what's going to happen there as far as that goes. So I do think you need some more diversified pieces, but up to a certain dollar amount, there's nothing wrong with that. That's an easy way of just kind of building up some money, and we actually do some of that with smaller accounts, as far as that goes, because sometimes you got $10,000, there's not enough money to even buy the right number of shares of some of these overall portfolios, so we'll make them a little bit simpler. And so, no, I think that's a great concept. I think it's something everybody should look at. I do think, unless you're really into it and want to go buy and sell stocks and options and all these different types of things, which I have no problem with either, if you're just looking to kind of set it and forget it, that's not a bad way to go. You don't often have access to those the way we need to inside of a 401k. Um, there's some that are sort of like that inside the 401k. And a lot of money that I look at is in 401k. So that's, kind of an issue, but, yeah, there's nothing wrong with that. It's not a bad concept altogether. That's for sure.
Yeah, and one thing to highlight is though is I think this is great for accumulate when you're accumulating money,
Hmm.
but I think the trouble is when there's a down market with these stocks, you're taking that entire brunt. There's less control,
Yeah.
and so you have to be careful.
Yeah, exactly. Yeah. It's there's pros and cons to every strategy out there, and so that overall, I would say I'm a pro of that strategy, but there are some issues with it, and I don't want to put $2 million in those four pieces or those two pieces you mentioned, VTI and VOO. That seems like too much for me. Honestly, I don't want that kind of risk. The time it takes to accumulate that kind of money, you definitely want to be careful and not have it disappear because of some silly thing, like just putting too much in any one place. So